Welcome to Fear and Greed Summer Investing Series, brought to you by Vanta, specialists in compliance-led growth. I'm Sean Aylmer. This year, it's been all about the battle between the big three on Wall Street, Apple, Nvidia, and Microsoft. All three are now worth more than $3 trillion. Apple's heading towards $4 trillion. The gap is widening between them and the rest of the Magnificent Seven. Can they keep going? How should investors look at these digital giants? As always, this is general information only, and you should seek independent advice before making investment decisions. William Liu is a senior investment analyst at WAM Global, based in New York. William, welcome back to Fear and Greed.
Hey, Sean, great to be here.
I suppose the question is, can they keep going? I actually want to take Nvidia first because that's the stock that did so well and then really has come off a bit in the last few months. It was 1 point bigger than Apple and Microsoft. It's now the number 3 stock. Where's Nvidia going?
Yeah, we don't own Nvidia in the WAM Global portfolio. We think, I guess, the risk reward isn't as attractive at these levels. And in the market, you've seen this rotation away from some of the hardware players towards the software names. So like Nvidia, like their goal is to add as much compute power into a single chip as possible. And so they can bundle these chips together into a large architecture to provide AI factories to its customers. It's a phenomenal business, but we think a lot of the upside is embedded into market expectations. We all know that it's a technology leader. There's an incredible AI opportunity. And we feel like there's just less ability to price the upside. The key things that we're paying attention to is that the hyperscalers have stepped up their CapEx expenditures meaningfully in recent quarters. And so each hyperscaler is investing roughly $20 billion per quarter into AI data centers. And Nvidia has been a significant beneficiary. And on top of that, you have some demand dynamics, which would inevitably ease. The way Nvidia is pricing these chips and the unit economics they earn means that their suppliers are looking for more cost-effective solutions and specialized solutions. So there's this interesting dynamic where Nvidia customers are actually looking to diversify away from them and optimize their compute costs so they don't require as many GPUs. So it's a great business, but I think where the valuation and where earnings expectations are right now, we think there's better opportunities elsewhere, but at the right price, we'd love to own it.
Okay, Apple. I mean, that's heading towards $4 trillion.
Yeah, that's true. They're also significant businesses. The Mag 7, as you mentioned, they're becoming bigger and bigger part of the indexes. So for us, the key thing that we're paying attention to for Apple is the rollout of Apple Intelligent features and AI and whether that drives an upcycle in their iPhone volumes, which is still the key growth driver for their business. The investor expectations have kept moving back. We're looking closely whether iPhone 17 could drive an increase in volumes, but we're a little bit skeptical. We're starting to see the pace of innovation slow a little bit at Apple. So the replacement rate, which is the percentage of people with replacing iPhone sales as a portion of their installed base, is at an all-time low at roughly 16%. And so I'm sure we've all experienced it. Users are generally holding on to their iPhones longer. And I believe this reflects limited new innovation. Maybe they come out with a better camera. And we're a bit cautious on what AI could really mean, particularly in the near term. It's a good business, but trading at over 30 times PE for mid-single digit top line growth, it's not incredibly attractive to us as a team either.
What about Tesla? We've got to go there. Hell of a run ever since Donald Trump's been elected. Is it sustainable?
Yeah, it's hard to say just because Elon is so close to Donald Trump that like there's been a lot of people who feel like Tesla will be a big beneficiary. At the end of the day, we don't own Tesla. We still see it as an automotive company. Admittedly, they are advantaged in the US where Chinese vehicles can't be exported into the US, and they have some good data. Elon's obviously, it's hard to bet against Elon, but when you look at it as an auto manufacturer, it doesn't make us that interested.
Okay, so the Magnificent Seven. So what else we've got to throw in there? Alphabet, Meta, Microsoft, and Amazon. And with those three, they're about a third of the S&P 500. I think they're about half the earnings growth over the past 12 months. Can they keep doing it in 2025?
Yeah, like out of the Magnificent Seven, we own one position. So we own Google. And we're really opportunistic in sort of building a position there when there was concerns that OpenAI and ChatGPT was going to disintermediate Google search. And there was some noise around the Department of Justice potentially breaking up Google and some regulatory concerns there. So we built a position and we started to build a bit more conviction in the investment thesis for Google. Their cloud business is doing incredibly well. One of the really interesting statistics that we found is that over 90% of AI unicorns are actually running on Google Cloud Platform. We're starting to see a meaningful acceleration in their cloud business. On top of that, very topical, we've seen quantum computing come up in the press more recently, and so developed the chip. I'm not an expert in quantum computing, but some of the statistics that I've been reading about are pretty remarkable. And that's another exciting optionality for them in the future. So Google's trades at a more reasonable valuation in our mind. It's, I think, 22 times with a really solid earnings growth outlook. So that's one of the magnificent 7 names that we own in the fund. I guess for us, we're really focused on undervalued growth companies, and Google fits into that investment process. And there's clear positive catalysts in the pipeline ahead.
William, thank you for your time.
Thanks, Sean.
That was William Liu, Senior Investment Analyst at WAM Global. Remember to get your own independent advice before making investment decisions. This is Fear and Greed Summer Investing Series, brought to you by Vanta. Vanta automates compliance for frameworks like ISO 27001, SOC 2, CPS 234 and Essential 8, saving time and money while building trust. Join over 8,000 companies like Atlassian, Dovetail and FireAnt managing real-time risk. Get $1,000 off at vanta.com/fearandgreed. I'm Sean Aylmer. Enjoy your day.